Bitcoin breaks another record high on Wednesday, a day followed by the digital gold's rally to $50,000. Analysts, experts, and specialists have been predicting against the strength of such prices amid elevated volatility. Investors worldwide have caused the price of the digital asset to surge during the pandemic as the US Federal Reserve failed to sustain its interest rates in March last year, severely weakening the US dollar, making Bitcoin an attractive currency. Hi guys, welcome once again to the Wealth Lab. Today, Bitcoin is the world's largest digital currency, with a market cap of almost $1 trillion, after it hit a new record high of $52,577 per Bitcoin. The record high price is descriptive of its wide acceptance among global investors and companies, such as Tesla, Visa, PayPal, MasterCard, and more. With a finite supply, investors believe that the digital asset's price will see astronomical numbers once the supply runs out. As Bitcoin surges to record highs every other day, global investors worldwide are stockpiling it, and international organizations are accepting it, only adding to Bitcoin's overflowing valuation. With support from major global companies, Bitcoin has gotten the necessary trust and push it needed for mass adoption. Some could say it's created a new disease called Bitcoin madness. Now, you're wondering what's caused Bitcoin's prices to go so high? And most importantly, what even is Bitcoin? Well, don't worry, we've got you covered. In this video, we'll break down the technology, the history, and the story behind the currency that is set to change the world, Bitcoin. As Bitcoin inches towards a $1 trillion market cap, it could be the fastest asset to hit $1 trillion. With an enormous and welcoming community, engaging social media buzz, active source code repository, and significant media attention, Bitcoin is making headlines just about every other day. So what is all the fuss about? Bitcoin is a cryptocurrency, a term introduced in a white paper published by an anonymous person or group under the name Satoshi Nakamoto in 2009. Interestingly, no one knows who Satoshi Nakamoto even is. While there are people who claim his identity, they've yet to prove themselves in front of the world. Enjoying this video so far? Remember to hit that subscribe and like button. Okay, let's get back to the video. Bitcoin was introduced as the world's first and most popular cryptocurrency on a cryptography mailing list at metsdown.com, where the anonymous founder announced that he'd been working on an electronic cash system that's completely peer-to-peer and decentralized. Bitcoin was created to bank the unbanked as a decentralized peer-to-peer electronic cash system built on blockchain technology. It operates with no central authority or banks. It's open source, and most importantly, nobody owns or controls Bitcoin. While there are no physical Bitcoins, balances are kept on a distributed ledger that everyone in the world has access to. So how does it run? The Bitcoin system is run by the people, for the people. People worldwide have dedicated their computers to the Bitcoin system. The Bitcoin system comprises of computers that collectively run and store the blockchain. The blockchain is a set of blocks where each block consists of transactions that occur on the network. What makes Bitcoin revolutionary is that it runs on a peer-to-peer network. Therefore, every computer in the blockchain system has access to the same list of blocks and transactions, making it impossible to cheat the system. Bitcoin is the pioneer of utilizing peer-to-peer technology to accommodate instant payments. Now, you might be saying to yourself, okay, so what? It's an electronic cash system that's built on a peer-to-peer network. What's so special about it? You might even think about PayPal or your banking app to surpass Bitcoin. However, Bitcoin is different, and let me tell you why. The Bitcoin network is a decentralized payment system, which means middlemen such as banks or credit unions are needless when transferring your assets with Bitcoin. It was designed as a movement against fiat paper money that has been affecting economies over the years. The whole ecosystem was introduced to mimic gold, hence the term digital gold. The pseudo-anonymous founder compared Bitcoin to gold with people on the network using their resources, such as computing power, time, and electricity, to create more Bitcoins. So why is it worth anything? To understand why Bitcoins are worth $50,000 a piece, we need to know why fiat currencies are worth what they are. Currencies worldwide are usable if they have some value, and if people can trust it to maintain their value over time without losing their worth. Throughout history, commodities or precious metals were used as a means of payment as they denoted stable value. Instead of carrying around excessive numbers of grains, gold, or other forms of currencies, societies evolved to minting currency as an alternative. Heading into the modern age, minted currencies were replaced by paper money. Governments around the world had to leave the gold standard in an effort to reserve gold supplies, such that many global currencies today are known as fiat. Fiat currencies are issued by governments and are not representative of or supported by any commodity. Instead, the fiat currencies we know are established on the faith that the consensus and the government accept that currency. Factors such as scarcity, divisibility, utility, and transferability also play a crucial role in giving currency its value. The supply of a currency allows it to maintain itself. High supply could cause prices of services to spike, while the opposite could also cause economic problems. However, with fiat currencies, governments around the world print money as a means of handling scarcity. For example, the US has a preset 2% inflation every year to drive down the value of the currency. Interestingly, Bitcoin has a finite supply of 21 million Bitcoins. To give it a little more context, there are currently 18 million Bitcoins in circulation, and the number of Bitcoins released is decreased by half every 4 years. Moreover, it's highly expected that we'll cross 19 million Bitcoins by 2022. The finite supply of the asset drives the value higher, as seen with precious metals like gold. For currencies to function, they have to serve as a medium of exchange across all types of goods and services within an economy. And for that to happen, the currency must be divisible to sponsor every good or service available in the economy. Interestingly, Bitcoins are divisible up to 10 million Satoshis. Named after the pseudonymous founder, Satoshis allow for quadrillions of individual Satoshis to be exchanged through a global economy. What's more, Bitcoin has a more considerable degree of divisibility than most fiat currencies. While most fiat currencies are divisible up to 1/100th of the primary currency, Bitcoin is divisible to 1/10th of a million of its value. It is essential that fiat currencies, or currencies in general, must be able to trade units of currencies for goods and services. Currencies should have the ability to quickly move from one location to the other, hence why commodities and precious metals aren't viable currencies today. Coherently, Bitcoin's distributed ledger allows the currency to be decentralized and trustless, which means that unlike fiat currencies, Bitcoin does not need to establish trust for its system to work. Enjoying this video so far? Remember to hit that subscribe and like button. Okay, let's get back to the video. Heading into the modern age, transportability was a crucial factor for currencies at the time. A currency should be easily exchanged between participants in an economy for it to be useful. For fiat currencies, that means they should be transferable within a country's economy and between nations via an exchange. Interestingly, as Bitcoins become more accessible than ever, Bitcoins are transferable between parties within minutes for low cost, regardless of the amount. Moreover, to be functional, currencies should be durable. This means coins or money that could wear out are insufficient. A dollar bill could potentially be torn, burned, or deemed unusable. Consequently, Bitcoin is extremely valued because it is immutable. It cannot be destroyed, lost, or diminished. If users were to lose their Bitcoin address, they could lose access to their Bitcoins forever. However, the asset itself will never be destroyed and will continue to exist on the distributed ledger. Considering the points we've just discussed, Bitcoin holds up against fiat currencies reasonably well. However, one of the most significant factors of the Bitcoin store of value is its status. Bitcoin's value is dependent on its utility as a medium of exchange. This means that for something to have value, it needs to have an intrinsic value. And if Bitcoin isn't accepted as a primary medium of exchange, it will have no value. With Bitcoin seeing acceptance from its community, retail investors, traders, and global companies, it is bound to have value. As more people accept Bitcoins, their value will continue to soar to record highs. Bitcoin is the largest cryptocurrency today, and it basically controls the whole market as it attributes more than half the cryptocurrency's $1.5 trillion market cap. Moreover, Bitcoin is a viable payment option in many stores around the world. Even Tesla, the electric car giant, is considering accepting Bitcoin as a payment option for their line of premium cars. Experts suggest that if larger companies follow in Tesla's footsteps, a Bitcoin could be worth over $10 million by the end of the decade. Now that we understand why Bitcoins have value, where they come from, and how they work, you might be wondering, should I join the community and invest in Bitcoins? Well, it is a complicated answer. Before you invest in Bitcoins, you must note that you'll be facing a myriad of risks. Bitcoin is one of the most volatile investments you'll ever make. No one can really tell where the price will land, and Bitcoin is no stranger to aggressive market movements and price changes. Bitcoin was worth $47,000 by January 2021. It then dropped to $30,000 by the end of January 2021, and today a single Bitcoin is worth a whopping $52,000. When investing in Bitcoins, or any cryptocurrencies for that matter, you need to be aware that the asset will always be volatile and potentially risky. As with any investment, you need to do your due diligence and not put all of your eggs in one basket. I wouldn't advise you to invest in Bitcoin as a means to make quick money. Rather, I'd advise you to invest in Bitcoin to participate in a movement for financial democracy. Moreover, other less risky options in the market could make you quick money, and Bitcoin just isn't one of them. Well, that's it from this video. Until next time, stay safe.